Good afternoon, ladies and gentlemen. Welcome back. I hope everyone's having a wonderful day. I know I am. We're honored to have someone we deeply admire back on the show, someone we've learned a great deal with over the years. And until this day, we continue to learn from Lynette Zhang of Zhang Enterprises. Lynette, it's a real pleasure to have you on. How are you doing?
I'm doing great. I'm very happy to be here. And I do believe we learn from each other. That's how you build a community, right?
Yeah,
we really
absolutely.
Appreciate that.
So we do have a lot to talk about. We are living through a very wild time, very strange times, I would say. And it seems that we're going through a full-blown transition. What's clearly a new world order, if you want to call it that. And at the core of all of this is the financial system. Yeah. So yeah, and it's interesting. Finally, we've been talking for years about the whole stablecoin, specifically, the RLUSD. That's the one tied to Ripple and the New York Fed. And it's interesting. They're creating a new demand for dollars, and this is what they're going to engineer, right? And bridging us into the stablecoin network. I know I said a lot over there, but it's all interconnected. So maybe you can bring us up to speed. How do you see everything unfolding and maybe the economy overall?
Well, overall, with the passage of the Genius Act, that stablecoin bill, I don't think people fully realize that the monetary system just changed. But remember, I was there in 1965. I was a child at that time when they took the silver out of our money. And I was also there in 1971 when they changed the system. And so when Nixon took us off the gold standard, and people don't realize that anything had changed because they know how to do this. But I can tell you there's not one little doubt in my mind. But this stablecoin legislation, the legalization of surveillance money, and the handing over of the money creation, not just to banks where it's been, but actually now directly to corporations like Amazon or Walmart. I mean, look, the easier and cheaper it is to create money, the more money gets created. And they took the gold out of the system. When they printed so many dollars, they couldn't afford to keep the gold in the system. They wanted more freedom and more flexibility to print at will. Then when they took the gold completely out of the system, I recently did a piece on seniorage, and it cost 9.4 cents to create a $100 bill. And if it's going digital, it costs less than that. So the cheaper and easier it is to create money, the more money got created. And I believe from the tip of my head to the bottom of my feet and everything in between, that this is the mechanism. The stable coins are the mechanism to generate that obvious hyperinflation that I believe has already started anyway, according to some data. And I think we've just entered the melt-up phase. And you kind of confirmed it right when you were talking about, which I did not see yet, but what the Fed said today and verifying the quantitative easing, which is just, and all that money that's out there raising the rates, well, that doesn't make that money evaporate. People kind of forget, and they think, all right, well, they printed all of this money and then that's over. No, all of that money, that fiat money, it's not real money, it's that fake money, is sloshing around in the system, going from one fiat money asset to another fiat money asset. And I believe, and I'm prepared to stick my technical neck on the line with this, I am really 100% certain that this is the mechanism that will usher in the hyperinflation and make it visible to the public.
Yeah, and what's interesting, Lynette, is just today the U.S. Treasury, they announced that they're going to be selling more short-term debt. So what's interesting is all debt eventually comes to a point where it's due, and trillions of dollars are about to be due, the bulk of the Treasury debt. And there are three options here at the moment. The first is default and go into a Mad Max situation, a total economic collapse. The second option is to repay it back, which is out of the equation because we can't afford to. Not enough GDP, not enough money not enough from the tax receipts. And the third option, which is the final option, which is inevitable, is roll it over. And I think they went to selling short-term debt because no investors want the long-term debt because there's not enough confidence in the U.S. government to pay that back. And second of all, why would people want to hold on to U.S. debt long-term, especially if they know that's just going to be devalued because of continuous money printing? So they're basically signaling to us that, hey, we're out of options. We're stuck in a corner here. And the solution to the debt crisis is more debt creation. Basically, they're going to print trillions. And we know what the result is going to be. And they could paint it however they want, Lynette and Verson, but you guys know the situation here. And I think, as you said, Lynette, when they went off the gold standard 1971 Nixon, this was basically the end of constitutional money.
Yes, but it kind of ended even before that. I mean, one of the things that probably 6 months ago, I stumbled across, I don't remember how, but I stumbled across this really early piece from the Federal Reserve when they were coming out and printing the money. And I didn't have time to look at it at that point, but I knew that it mattered. So I just grabbed it with the link and I threw it on a PowerPoint slide. And I don't know if you happened to catch Michael Barr's speech a week or so ago, talking about the Depression, the 1980s savings and loan crisis, and the 2008 great financial crisis. First of all, he said it was all about regulations. No, it wasn't. It was about creating all of this money. When I went back in, so I went in to analyze that whole thing that he talked about, because I know that he doesn't know what he's talking about. And I went back to that piece that I had pulled like 6 months ago. And I'm telling you, I did such a happy dance when I saw it, because the one thing that I didn't have was the actual hard proof from the Federal Reserve of how they took corporate debt and turned those into the Federal Reserve notes and allowed those to trade right alongside the gold certificates and the gold coins to get people used to it. And they're using the same playbook now, right? So taking the corporations and allowing them to just really, you know, we've had this conversation. Remember I said, I'm not really sure yet what's going to justify the crypto printing or creating the cryptocurrencies.
I remember, yeah.
Right? Because all I ever saw was, well, either debt or purchases. Well, my friends, it looks like a combination of the two.
Yeah. So in other words, you're saying the game never changes, just the players do?
That is what I'm saying. And that's also why we base the strategy on those things that happen 100% of the time. Because even though I can't guarantee the future, I don't know, if it's happened over 4,800 times, what's it likely to be? Is it going to be different this time? I think that's called insanity. So yes, they know how to do this. They know how to do it pretty invisibly, because I'll bet you if you walked outside and you went to your neighbor and you said, did you know they just changed the monetary system on the 18th of June or July, whatever that date was? July, I think. And they would have said, what are you talking about? Everything works the same until
they won't notice.
No, they won't.
The whole tokenization aspect of this.
Really
redefining the meaning of ownership, and that famous slogan, infamous one from the World Economic Forum, own nothing and be happy. That's tokenization. By definition, you know, it changes the entire landscape and it redefines your sovereignty, your liberty, and all of that. And the scary thing is, Lynette, it's being disguised as decentralized.
Yeah. It's not, and neither are the stable. None of it is. This is all about a full surveillance economy where you are completely directed. And I mean, look, didn't they just debank the attorney for the trucker strike up in Canada, that perfectly legal trucker strike? Not only did they, cut them off, but now they recently debanked the attorney that supported them. or that
crazy.
represented them. I mean, look what's happening in the world. It isn't just in the US, this shift. This is a very scary global shift, and it makes owning and in your possession physical gold and silver, honestly, makes it so much more important than it's ever been, because this is the way we fight back.
Agreed. Before we shift into gold and silver, what do you think about smart contracts? I know you've been writing a lot about that. I know it falls into the jurisdiction of tokenization as well. So do you have any thoughts?
Yeah, 100%. And I've actually been talking about this since 2015. That's when I first came across this. And so when you're looking at the tokenization, they break your equity down into itty bitty pieces because banks want more collateral. This is about gathering collateral. And I realized, as a new stockbroker in the 80s, that's when globalization was coming out. And that's also when we were tasked with gathering assets in-house, right? So what do they really want to tokenize? They really want to tokenize this. They actually even want to tokenize this. And then you have to rent everything. And you don't realize it. Who doesn't walk around with their phone and go, oh, okay, I want that blouse, boom, boom, boom. And before you know it, with the layer of the smart contracts, there's no human contact, right? So you sell your equity in your house, you sell a little bit, and you do it in little teeny bite-sized pieces. You have no idea what you're doing. And then all of a sudden you get notice that that smart contract has been executed and you no longer can live in that house or own it or what have you. And if it's a smart house, boy, they can just boom, remotely lock you out.
Yeah, it's like the smart cars. They turn off if you don't pay your bill, for instance, or if you have too many tickets that haven't been paid. So there's certainly no decentralization aspect or component to any of this, in fact.
Right.
Yeah. And finally, if you read David Rogers' Webb, The Great Taking, or watch the documentary at least, the missing link to his research is the digital tokenization of assets. And just overall redefining the ownership itself, and securities are being tokenized as well. And that's how they're going to consolidate. So the Great Taking is really the great consolidation.
Absolutely. And it's away from the public and consolidating that power and that ownership in a very small group of people. But we have choices yet. And that's really what I want people to understand. And we have to make these choices. And that's why I've gotten very involved. I'm learning how to do this. Honestly, I'm kind of a newbie at it, but I do sit on the advisory board of the Citizens for Sound Money movement. And we did get to meet with Byron Donalds, who is the probable next governor of Florida, and also, thank goodness, a sound money proponent. But we, the people, need to take our power back. They're not going to just offer it to us, right? There's enough of us to demand it. And the way that you do it is you just convert your garbage fiat into sound money. And if enough people can do that, we can actually demand a component of redeemable gold back in the monetary system. Yeah. And it has to be redeemable, because what that means is, like in the early days, if you did not like what our government was doing, you could walk in with a gold certificate and you could walk out with the gold. And what that did, that was your vote. You did not like that, what they were doing. So you had the power over the politicians and the central bankers. Well, we need to do that again. So if you cannot redeem it, if you can't say, okay, well, I don't like what you're doing, so give me the component of gold. Doesn't have to be 100%. I'm okay with 40%, but I'll take the gold. You could keep the rest. Then we have our voice, and we better do it because time is running out, and this is our opportunity.
Yeah. Windows closing, certainly.
If they require a tracking of that tokenized gold, it probably doesn't really matter too much where it's held.
Agreed.
So the point is to not put it in the system. to begin with, because that really is, how do you catch a wild boar? You give them something for free and they get used to it, and you start to put up all of the fences all around them. And that's what tokenization is about, and why the WEF can say by 2030, you will own nothing. I can't go to that next part about being happy, because that's taking us back to the feudal system. Mm-hmm. And if they are successful, I mean, they're not going to be able to tokenize all the gold because they can't force you. If they forced you, you'd know it. Now, it may end up, if they get enough participation, that they can ultimately force it, but gold is invisible. And it is the only financial asset that runs no counterparty risk. As soon as you tokenize it, you've given that up. You have absolutely 100% given up that this is the only financial asset. The Bank for International Settlements did not say one of two or one of five. They said the only financial asset that runs no counterparty risk, where all of this cryptocurrencies and tokenization and all of that is, to your earlier point, consolidating ownership. And they've done that with stocks. And so do they really need to tokenize it? Well, it makes it easier to trade cross-border and cheaper. And isn't that what they're talking about, is how much cheaper moving the money, making the money, right? Well, so now you need to tell me this. Here's the question. How does money get its value?
Great.
It takes nothing to create it. It has no value. Mm-hmm. And the other thing that I think is super interesting, staying on the gold part, because where are they? Take your pick. I have a visible, a tangible representation of Bitcoin, XRP, and Ethereum. And don't they all just kind of look like a 1 ounce gold coin? Don't they?
Yeah.
There is a reason why they do that. Now, I've heard tell that, well, Bitcoin takes money to create all that energy and water and all these cryptocurrencies. So that's what gives it the value. Mm-hmm. You know why that argument makes zero sense? Because it takes energy and lots of stuff, labor, etc., to produce this ounce of gold. But then, because this is indestructible, it stores that energy. And it can go from, since it's used in every single sector of the global economy, it can go from one sector into the other sector, utilizing that same energy over and over and over again, an infinite number of times, because this is indestructible. What happens to the energy that it takes to create this? It's gone. It's gone.
It's a very good point.
Yeah, excellent point.
Something interesting also is the very same people who are pushing for tokenization of physical gold are also turning to physical gold.
Yeah.
That's a red flag.
Tokenize it. That's just, it's like, it makes no sense to me, and I will never volunteer it. But think about this. If they can create a big enough crisis, and a hyperinflationary depression would be a big enough crisis, then people will do whatever they think they might do because they're panicked. Now, I'm not going to panic because I'm prepared. And it isn't just that I have gold and silver. It's that I have surety and security in food, water, energy, security itself, barterability, wealth preservation. I have my community around me and growing, and shelter. I don't need it. If they tell me to jump, I don't have to say how high, because I'm independent and I'm maintaining my freedom. And that's what we all need to do. We need to come together in community. We need to buy physical and hold it ourselves, because if you don't hold it, you don't own it. And we need to demand redeemable gold back in the system. And we've got a shot. I believe we really have a very strong shot.
Gold is actually officially back as a core reserve asset, you could say. I mean, at every level, really.
Absolutely. And it always was. It always was. I'm just wondering why we don't hear anything about Fort Knox anymore, because we sure heard a lot about it, and then it got dead silent. And so what does that actually mean? I don't know.
What's interesting is I learned this over the years, and I'm sure you know as well, but they are, when I say they, you know who I'm talking about. They are masters of deception, psyops, okay, and masters of misdirection by design.
Absolutely.
So the whole thing, go ahead.
Well, I was going to say, and keep in mind that our government and our central bankers employ the most brilliant psychiatrists and psychologists.
Indeed.
So that's the other piece that people don't really think too much about. But with all of the data that they have gathered on us through the computer and our searches and what we're looking at, and what we buy and how we live and where we travel. They know our hot buttons, right? And so going back to the tokenization, just how hard do you think it would be to encourage, or what they call nudging, people to spend all of their equity without even thinking about it?
Right. I follow Palantir very closely. At what they're doing, what they're building. It's very nefarious, I would say. It's a digital control grid that's underpinned by surveillance. And what I'm calling it is Patriot Act 2.0, really, built with AI infrastructure. And of course, that's also going to destroy or disrupt the entire job market moving forward, which is crazy.
Well,
we haven't seen anything yet, really.
No. I don't think we have. I can say I'm glad I'm old.
No, you're not, Lynette. Oh, you're just being modest. What I was going to ask you about is, let's talk about the money printing for a second. So we kind of know what they're doing here. The signals are there for anybody paying attention. Forget what they say, pay attention to what they're really doing. And kind of interpretation, being able to interpret what they're trying to do. Do you see they keep kicking this can down the road for a long period of time, given the stablecoin introduction now? Basically, what I'm asking you is, it seems like on the surface that they can keep inflating and debasing the debt and the currency for a long time. It seems like before that hyperinflation moment really kicks in and the money bazookas stop fixing the problem, and they say, okay, guys, it's time to, flip a switch here per se, and kind of maybe create a crisis to introduce some solution and speed up the process. My question is, do you see this being able to keep going for a long time?
No, I don't. No, I 100% do not. That's what I saw after with the QE and all of that in 2008. I started talking about the reset in 2009. I started talking about the system dying in 2008, and then it needed to be put on life support because they weren't ready yet. I saw Bitcoin come out in January of 2009, and quantitative easing began in March of 2009. It's all laid out in the 1996 NSA government agency white paper, How to Create a Mint. Have they not done that? And
over
then
and over.
Please. And then the peer review paper on the smart contracts. This has been planned. These things don't happen overnight. And so do I think that no, because I really do believe without any hesitation or any doubt in my mind that the stable coins are here to usher in that hyperinflation. And frankly, it's not something that I'm waiting for to begin, because if you look in 2022 and you go to the monetary velocity, the M2 velocity, that's the speed at which money changes hands, you see a major pattern shift that has occurred, not like we've ever seen before. So the fact that it's not as visible is kind of not, I guess, relevant. The fact is that when you get a signal, that means something. And now with the stable coins, I do believe we just entered the melt up phase. And the melt up phase doesn't last for an extraordinarily long time, but it's got to keep you suckered in enough. And a great example is Venezuela. Because in 2012, 13, 14, and I think 15, they had the best performing stock markets in the world, but they were also going through the hyperinflation. So having those cryptocurrencies and stock markets, and lower those rates, we got to keep that real estate market severely overvalued. No, because at some point it matters again. And I think this was the mechanism. And I'm really giving it tops 2 years, but not before we see the hyperinflation.
Yeah, it's like a problem reaction solution. That's why we're seeing already a spike in stablecoins. And the reason why they're seeing a spike in stablecoins, specifically the RLUSD, is because what they're trying to do is manufacture the need for digital dollars to make the debt seem more attractable. That's why the Treasury Department is already looking at gold-backed stablecoins, full but partial. But what they're going to do at the same time is kick the can a little bit while people are distracted because the markets are up artificially, of course.
Exactly.
And they're bridging us into the stablecoin. So this is all simultaneously happening at the same time. It's very multidimensional.
Of course, it always is. So no matter where you look, you're not really seeing, a full picture. And that's why they have to approach it from all of these sides. But timing is the biggest challenge, but I don't see it. And the reason why I can't see it lasting that much longer is going back to public confidence. Mm-hmm. Now, the confidence numbers came out better yesterday, but they are still trading near lows. And so when you get to a technical level, when it breaks below that, so we start to get rapid inflation again, it's going to erode very quickly. And, whether or not they can keep it bouncing up, look, you've got people that have to use 4 easy payments to feed their family every week.
Sad.
It is.
These people cannot, I'm pretty sure these people don't believe that everything is hunky dory.
Right. Like it's becoming obvious to the ordinary and average person. And when that begins to happen and the middle class begins to feel the pinch, that's when crime rises. That's when the solutions are kind of brought in that have been predetermined. And at the same time, that's when the party is over in a sense.
That's it.
Yeah.
So that's why I don't think they can kick it down for, 5 or 10 or 20 years. That and the fact that there is officially like 3 cents, there's no purchasing power left in the currency. And so they have to start to attack principle. And Switzerland will have to double check, but they're flirting with negative rates again. Yeah. And if you think negative rates won't come to the US and everywhere else, think again, because once they get all the purchasing power out, what's left? And with these cryptocurrencies and the digital currencies and the stable coins, I'm sorry, I am not that kind of an engineer. And where this stuff kind of creates debt limitations because it's 1.00, and you can go maybe another 2 digits after that, but you can't go all the way to here, but you can with the cryptocurrencies. And so those cryptocurrencies are a way to continue to rob you more invisibly than the obvious inflation and people don't even really see that if they can keep it at a low enough level. It's crazy.
Yeah. And I want to add to your point, add to that the Stablecoin Genius Act, the introduction of it, I completely agree with you. And I also think that it was one of the first major steps in regulation to kind of facilitate and get us closer in that direction, paving the way. And I think they're going to use this also, we've talked about this, to the more stablecoin demand from their own government here, the more that would translate to treasury demand, so that they could prop up the treasury market to basically keep it on artificial life support until I guess they're ready to make that complete switch, because we are living through the reset. It just hasn't fully manifested yet.
It's in stages.
Yeah. But I think during this transition, I think this is going to significantly, as you've stated previously, Lynette, increase the wealth gap here. So people need to make a decision and execute on it and protect yourself financially, because you're not going to be in the middle anymore. You're going to be on one side of the spectrum or the other. And that's either you're going to have some wealth and get ahead, or you're going to be at the bottom of the food chain and be in a worse position.
Yes. And that's what the central bank digital currency is already being predetermined for, a solution to a financial crisis. It was the IMF who specifically stated this. And to your point, Vandell, as far as the stablecoin bill, that regulatory framework you're talking about is the mechanism also to bring regulated capital from traditional markets, 401ks, IRAs, things of that nature, to push it into the digital ecosystem for that consolidation of wealth.
100%.
When we start looking at this big picture now, it's very disturbing, but there is wealth creation potential, like an opportunity out there to make money and participate to a degree, I would say, in the wealth consolidation. But then you need to have an exit strategy to get back into hard assets, rotate, if you will.
I mean, there might be some people that just think I'm crazy because I started watching Bitcoin when it was $7 a coin. Okay. So that was really early in, and I knew that was brought in for this purpose. And in some ways, to be really honest with you, I'm sitting here going, I don't know, am I doing a disservice and blah, 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 blah. But I realized, number one, because I'm so visible, I have to always live my words. And the reason why I could not participate in it, and I'm not going to participate in it now, is because I cannot support the lie. And I know that this is a Trojan horse to fully enslave us.
Agreed.
And a little bit of pickup in fiat that's devalued. What is that? Who cares? I mean, seriously, because when this thing turns, you think about 2008, boom, 24 hours, done.
The party was over.
The party was over, literally 24 hours. If you were approved for a loan and you were closing that morning, it did not happen. It did not happen. And so, everybody's got to do what they're comfortable doing. This is where I've lived my life, my entire life, as a stockbroker, as a banker, as living through currency. It wasn't really a reset because we just shifted a little bit. This is a big one. This one is huge. Yes. But I was there at 65. Oh, don't worry about it. It's no big deal because, hey, this new quarter fits in all of the gum machines and all of that. And hey, doesn't it look like this? So nothing is changing. Everything changed. Everything changed. So people, you do whatever you want. And I support it 100% because you have the right to live your life and do what's right for you. But I'm going to tell you, if you do that, you better have this properly diversified with gold that's in your possession and not tokenized and not in an ETF and not other garbage. And because if you do not do that, good luck. I mean, Shearson was my alma mater, and I do consider myself a technician, and I certainly am paying attention, and I couldn't have told you 1 minute before they let it go, and it went out, and we had that crisis.
I mean, it's very admirable what you're doing, and that's why we have so much respect for you. It's like you see both sides of the aisle, and that's the important discussion that we're having here. For many years, Vandell and I, we used to embrace this technology. After we had some few discussions, including listening to you as well, we began to look under the hood, and we had all the documents, the IMF, BIS, WEF, and next thing you know, even the UN They were at the forefront of all this alongside the Vatican Bank. That's how deep the rabbit hole went. We realized, oh my God, we see what they're doing. The conspiracy theories are not conspiracies. There is they're trying to usher in a digital grid to enslave people, Patriot Act 2.0. And that's why the importance of physical assets is necessary. But I know they're printing so much money. I know they're artificially inflating these asset prices, making the rich richer, poor poorer. So what are your thoughts on the gold market? Do you see a lot of pressure building up there?
Well, I do. And it's really interesting because when I was watching Bloomberg, I think it was yesterday, and they pulled up a chart on ETFs. And do you know the ETF that, I mean, by a wide margin that people had bought into? GLD. GLD. I mean, by a wide margin. Silver was in there too, but it was much lower. But I mean, it was probably, this is just off the top of my head, but I captured that screenshot. It was probably about twice as much as the most near thing beyond that. So yes, I do see people that are waking up. Now, GLD isn't really gold, but
paper
shows the awareness.
And the derivatives market is a ticking time bomb too. That could go off any day. You never know. And that would significantly increase the price and, of course, the need for physical demand, something, you and Andy talk about a lot.
And you know what else I'm really curious about? And we aren't going to know until this happens. And, maybe it'll be a nothing burger. But we don't really hear very much or anything about all of that gold that was, and silver for that matter, that was repatriated to the U.S. the beginning of this year. Now,
the new administration,
right? Because people were nervous. And so really, I say repatriated because in the US, it's primarily just contracts that they're trading back and forth. But there was a tremendous amount of physical metals that came particularly from the Bank of England. And what I'm really waiting to see is what happens. First of all, those metals, that wasn't Bank of England's metals because they don't really have very much, but they do store a lot of metals for a bunch of countries around the world. So was that the gold that got shipped here? And if that is so, then what happens when those countries want to repatriate that gold? Because to your earlier point, Versan, gold is a tier 1 asset. And, I think that the scarier this gets, I mean, you look at what the global central banks are doing with gold.
Record piling.
Yeah.
This is the 4th year in a row. And you know what else is really interesting? Look, the senior rich, when the central bank creates a dollar, whether it's a digital dollar or it's a physical bill, they get to charge you like $100. And like, I think I said this earlier, it costs 9.4 cents to create this, right? $100 bill. But yet you and I have to work for that $100 bill. That means that virtually all of their profits, they're at about 100%. And yet we are now in the 4th year in a row, and the Fed takes that money that they get from that, and that's what they run their business on. And then anything left over, they send to the Treasury. Well, they haven't sent anything over to the Treasury. We're now in the 4th year, and the Fed's balance sheet is way below water. Why? I mean, if you could create as much money as you wanted to, and you got to charge almost 100%, I believe it works out to 99.97%. How can you be losing money?
Yeah. And it's very clear if you look at all these, I would say, signals that gold is being reintegrated to a degree into the monetary system for sure. And they're trying to front run people on this.
Yes.
They're trying to keep it silent as well and distract people by telling you go buy cryptocurrency and Bitcoin. That's the truth. There's going to be a few of them that survive, like the .com bubble. But most of them are going to go to zero. There's going to be humongous lawsuits globally. I see where this is going.
Yeah.
This is the dot-com bubble 2.0, but it's going to be even bigger and worse because of the debt levels and overstuffing of overinvestment. And it's insane. You know, with us, with Versan and myself, you can be transparent and honest. Everybody always appreciates your opinion. So for a while now, there's been talk and even some sort of documentation surfacing saying that the Fed is being replaced or removed and some new entity is going to be put in place. In my opinion, I think this is a complete psyop, and I think what they're doing, if that happened, is just swapping one bad guy for another bad guy with the same function in place for a new system. But I'd love to hear your thoughts on that. I don't know if you've heard of that.
There are so many things that are floating around, but what the government wants, what this administration wants, but all of them do, so it's not just this one, is they want to direct how much money is created and take that over. The Federal Reserve is really not necessary. It wasn't necessary on a gold standard, and it's more about doing a scapegoat. But I do think that this is our opportunity to get gold back in the system. But I could see the Federal Reserve being absorbed in some way. But what that reminds me of is Burns, Fed Chair Burns during Nixon's administration, who just did what Nixon wanted. It was the same kind of circumstance. And what did we get? We had 45% inflation then. Now, that's not technically hyperinflation, but I lived through it. And I remember, being in lines and the oil embargo. And I had a 5-year CD at 15%, for goodness sakes. I wish I could have locked that in for a long time, right? So I see a lot of parallels, and especially when you're talking about the independence of the central bank, I see a lot of parallels that go back to 1971 with Nixon and Burns, and then even going back to 1913 in that era when they brought out and started this fiat money system because they didn't like that you and I had control. They wanted the control. So what I see is an awful lot of parallels to a currency regime shift. And we have to become our own central bankers, and we have to come together and have these conversations, because people aren't aware. And we're going to have to help those that are not aware. We can't just leave them out there. We need to all pull together to make a positive difference in this world for what's coming. So, yeah, I think maybe the era of the central bank could be coming to an end again. Not for a while, because they're going to have to be a scapegoat. So we're talking about a long time. But I would imagine that it would benefit the administration to even if it's just a figurehead, to have the Federal Reserve there just so they can point a finger.
Yeah. Real quick, to add some flavor to all of that, it was Nomi Prinz from Goldman Sachs in 2022 who went on a talk show and explained that eventually there were those two blockchain protocols, and I think we've spoken about that before, that we're going to replace the entire infrastructure of the financial system. And what she did say, which caught my attention, is that eventually what this means is that all the central banks and financial institutions will basically be consolidated and privatized and become a licensee of possibly the Treasury Department. And I found that very interesting. So
that is very interesting. But too, the International Monetary Fund has kind of been talking about that for a long time, how everything would travel through them. Basically. And, they've set up a universal currency. And I have to tell you that, in my opinion, it's the one that makes the most sense because it's been around since 1969. So using all of that technology, but if all assets and all tokenized assets had to flow through the IMF, which are the members are central bank chiefs and treasury secretaries, that piece could change who's part of that, but that centralizes control in one place for the globe. That's a global one world system, though we won't know it because they've got the global umbrella, which they can put every currency on the planet in that, and their SDR, it stands for special drawing rights.
Yes.
And that just translates to local currency. So we think nothing has changed when in reality, everything has changed.
I mean, I think what we're going to have towards the end of this is a two-tier monetary system. I've been following Augustin Carstens from the BIS for a very long time. It was him who mentioned this first, saying that we need a two-tier monetary system. One would be central bank money, and one would be private money. And the only two working at the highest levels with the IMF, the BIS, the United Nations, is, again, the XRP and XLM. What's interesting is one seems to be through stablecoins or some other mechanism, indirectly or directly linked to gold. So gold would be the collateral, and the digital asset that would move that would be the XRP. And if you look at the other documents, it's the central bank digital currency that is being built by Stellar, the Stellar network. So it's very possible that could be that two-tier monetary framework.
That's the keys, and that's the way they always did it. You've heard of the Roaring '20s. Right? It was from all that money creation, but was it really good? And the other thing that they do is, and they did this in the '20s, when they first put this money out and the purchasing power dropped 50%. Then it came up a little bit and stabilized, and you had the Roaring '20s. So yes, they're hollering because of that major loss of purchasing power, but when there's a little bit of pickup, people go, oh, good, things are getting back to normal. No, it's a new normal. You just don't realize because you go from one extreme to the other. And I just had this conversation with one of my producers, and she's pretty new to this area. And we were talking about rent, and she's like, oh, yeah, the rent was going up like really bad, really bad. But, it came down a little bit. And so it's not so bad. Okay, we're getting back to normal. And I realized when I heard that, that's how people operate, right?
Yeah. They put the pressure on and then they take it off. Put it on, take it off.
Right. And then that's how they kind of guide you down that path. I mean,
yeah, there was a very interesting video. The guy was breaking down this very detailed, elaborate story, how the central banks kind of instigated and intentionally created the crash in Japan. So that way they can come in and buy up everything for nothing. And then he was visited by the CIA saying, we're watching you, simply because he was revealing this in the early days. And nothing has changed since. In fact, it's gotten worse. It's crazy.
This is such a bigger battle, right? I mean, I appreciate that you don't think I'm old. I am 70 years old, so I probably have another 30 years because I think I'm going to make it to 100.
You look so much younger. It's absolutely incredible. I'm not even joking.
It's clean living. But I do a lot to take care of myself because I need to stay around as long as possible and bring value to the table. But my point is, I have a 12-year-old grandson, a 10-year-old granddaughter, a 16-year-old and a 19-year-old, right? It's for them. This battle is not just for them, but it's for the children that they're going to have. If we don't demand this and take our power back, because I don't know that this new system, even with the gold backing in there, we have to be really careful. It's got to be redeemable because they'll sell it like, yeah, it's backed by gold. But then all they do is they peg it like Zimbabwe. They peg it to a manipulated price, right? And so it doesn't mean anything. So they came out with their new currency last April. A year ago last April, they did a 44% overnight devaluation in October. But wait a minute, it was supposed to be backed by 40% gold. How could they do that devaluation? Because it wasn't real. And that's what we have to demand as a unit, as a global unit. We have to demand our power back because there is more of us than there are of them. And yet we just kind of follow like lemmings. And I'm saying we got to stop this because it just keeps getting worse and worse and worse and worse. And so, I personally don't want to be a debt slave.
Yeah.
Agreed.
I know people that they like sweat. How are they going to, make their car payment and their rent payment and feed their family and pay the utilities and pay the insurance? And,
it's too much. And people are feeling the pressure. It's very sad. I mean, I talk to people every day. I'm trying my best to also guide people in making the right choices, but we'll see.
We're in the fight, but when you stop and think about it, when we're in the gold standard, the average wage was $800 and a family of 4 could live on that. In 1971, the average wage was $10,500 and a family of 4 could live on that. One wage earner. Today, the average wage, I think, is something like $68,000. It takes 2 wage earners and they still have to get out a 4-part loan to feed their families. Yeah. If we were on the gold standard, if we had that demanded, then I think the wage would be something like $800,000 if we never got a raise, but we're paid in the same amount of gold. We have to take that back. Or what are you going to do? You're going to go out and like the feudal times, you're going to plant and dig and work in the fields, and then the overlord takes everything and you're left with straw.
That's essentially what it is right now. That's the situation. It's just a modernized version of it.
Yeah, and that is slavery now, and something used to be looked very down upon back in the days, right? And now it's kind of embraced and pushed on people. So, I mean, we're going to get through this. I think we just kind of keep fighting the fight, and we're doing that every day. So are you. And there are so many other admirable people in this space that I really admire, and I love what you guys do. And with all these changes accelerating, I think it's important for us to communicate more. So maybe we'll get you on very soon, not too long from now.
Absolutely. I would anytime at all. I really have a lot of admiration and respect for the two of you as well.
And I enjoy so much,
conversations.
I do too. Especially before we record or off camera, usually those are the best. But yeah, this is fantastic. Again, thank you so much, Lynette. It's always good speaking to you. Thank you for being here.
Yes.
My pleasure.
And to everyone listening, please make sure you subscribe to Lynette Zhang's YouTube channel. The link will be in the description below. And also check out her website, Zhang Enterprises.
And she has a Twitter X account as well.
We'll put all that in there. I got you covered. But please take care of yourself, and until next time, we'll see you soon.
Absolutely.